you also need to consider what your non-concessional contribution amount should be, because next financial year it's reducing. The threshold is reducing to $100,000 a year. And I know this sounds like a lot, and many of you who are earning around $36,000 or less might be thinking that you'll take advantage of the government co-contribution, which is putting $1,000 into your account to get a co-contribution from the government of $500. And this is the type of contributions we're talking about. Non-concessional means that it's after-tax money that you've got in your bank account and you're putting that into super. There's no tax payable on the way in, and the threshold is going to change to $100,000 next financial year. But if you are under 65, you can actually bring forward 2 future year contribution limits to put $300,000 in one financial year. You need to be under 65 for you to do that. But the window of opportunity for some is that you may be able to take advantage of the old contribution limit. So currently this financial year you can put in up to $180,000, and if you are under 65 you can bring forward 2 future years contributions at the old rate of $180,000. So you could actually put in, an individual can put in up to $540,000. Now that's assuming that you haven't breached your bring forward rules in prior financial years. But you might be thinking, well, I've only got $350,000 in my super account, so I haven't got surplus money to put in. Well, there are strategies, if that is your situation, where we often consider cashing out your super balance, putting it into your bank account, and then contributing it back into your super to facilitate estate planning and saving your beneficiaries tax, because often your super account is made up of taxed components which are taxed at 17% if they go to financial non-dependence. So it's a way that you can utilize these thresholds and save your kids, your adult kids for example, 17% death benefits tax. So that's the non-concessional contribution limit. So think about how much you want to put in. If you're on a low income, then you may be just thinking about $1,000 for the government co-contribution. If you've sold assets or thinking about or received an inheritance or wanting to complete that cash out recontribution, then you might want to utilize these types of thresholds. You also might want to consider these contribution limits if your super balance is getting close to the new proposed threshold. So there's if your account is, if your super account, that includes both your superannuation account and your pension account, so accumulation and pension account, is over $1.6 million, then you can't put any more funds into super next financial year. But this financial year, you've still got these $540,000 limits without the $1.6 million rule applying. So that's just another reason why you might consider this window of opportunity to get funds into super. We've got a number of clients at the moment that we're working towards retirement, and to avoid having to worry about tenants and managing investment properties, we're liquidating investment properties and contributing the proceeds to super, so we're moving into the 0% tax environment of the pension phase of super, so under these limited window of opportunity to get funds into super.